What's happening all? It is March 28th. Happy birthday, Stu, my little brother. It's 40 whatever years on this rock, and I hope it's a really good one for you. To get into earlier this week, we started Tuesday very, very early. So I want to break some things down there. But before we get too far into it, one of the things I want you guys to be aware of, we've talked a lot about the loans to your LLC. Getting that 30-year fixed loan, something investors have been wanting for a very long time. Now we got it. And that's something you really, really wrap your head around. I know some people say, well, what if the rates are lower to do my Fannie Freddie and I use up my Fannie Freddie loan? Don't do that. Use these while you can get them. These come in and out of availability sometimes, depending on market swings. We know our market's kind of all over the place. So get a hold of them while you can. Now, I know getting your LLCs are expensive. Depending upon where you go, they could be upwards of $1,000 to get a new LLC. I'm working out a deal for you. One price, unlimited LLCs, just pay the filing fees and the renewals, and that's it. I've got a firm that I'm working with, a national firm. So you don't have to try and find somebody in each state. I'm getting this worked out. A lot of people call me and say, what CPA should I use? Let me connect you with this national firm. They have a law firm and a CPA firm at the same time. Interview them, understand them, see if it works. I will get you the link. I'm just waiting on that to get all that all rigged up. You should have that this next week. So cool stuff is coming, but do not discount that 30-year fixed loan to your LLC. There's a lot of power there. Call me. Let's set it up. Let's talk about it. Now, let's get into this week. I started my market breakdown on Tuesday very early because I was in Florida. So now let me tell you what happened on Tuesday. So yeah, the FHFA index come out saying that year over year home prices were up 4.8%. Case-Shiller is 4.7. So those were correlating pretty well. That is signaling that there's continued depreciation despite there's affordability challenges. So people are still seeing prices go up, even though not as many people can afford homes. New home sales up 1.8%. Still weak at 676 annualized, but because buyers are still cautious, but it's up from the plunge from the week before. Now, consumer confidence, that went down to 92.9 from 98.3. That's a market mover. Weaker sentiment tends to support bonds, and it did help MBS prices a little bit. Now, the yields on the 10-year found some footing, but it's waiting to see how the bigger catalysts happen later in the week. So when we get into Thursday, there's a lot of tariff tension in the markets. GDP 2.4%, which is slightly stronger than what they forecasted at 2.3. So a little bit of a tick up. Not a big confidence builder. From quarter one is sitting at a negative 1.8%. So the quarter versus the monthly, there is a difference there. Jobless claims, those were flat somewhat. The tariffs, those are what's pushing things around. People are a little bit worried about that. So they don't know what's going to happen to the economy when those things start really getting moved around because we haven't seen a lot of that. Let's think about this. The tariff situation that we've had in our global economy has been more leaning on us than us leaning on other people. So this is starting to equalize. We haven't seen what that's going to do. So people are worried about that. I think it's going to work out pretty well for us. The UMBS, we had some selling pressure as a result of that, a little bit more expensive. Locking became a little bit of risk as a result of how things were working yesterday. Now, today, we had core PCE, personal consumption expenditures, which is what the Fed was to measure inflation with, more so than the CPI. So the month over month shows it was a little bit hotter, and the year over year was slightly harder than what we believed it would be. So normally we'd have a bond sell-off, but we didn't see that as much today. So we had, a little bit of a gap. It wasn't even a gap up open. We had the wicks we're touching. We opened up pretty good, and I'll show you that here in a minute. The inflation expectations jumped a bit. But we've got consumer sentiment that showed that it has been weakening, even though we've had consumer income go up. So let me just show you on the bonds what that yielded or yield's kind of a weird word at this point, but what the outcome was with the bonds. So you can see what's going on here. So one of the things I like to show or take away is these channels. So I'll show you the channel when I see a pattern forming. We had this earlier a few weeks ago, and then I took it away because we broke out of it. But now I'm starting to see another one forming. It's going at the same trajectory downward. But we saw today, like I was just referencing, comes some of that data, it's punching up, and see if it'll push up out of the channel, but it's hitting a barrier right here. I'm going to zoom in on this. It's hitting one of these barriers that it might push it back down. So we also have a moving average that's coming up on. We'll see if it stays within this channel. Will this be one of those scenarios? You lock at the top, flow at the bottom, those kind of deals, but we're going to be riding this channel possibly downward. We also know that our biggest barrier is this up here. This has proven to be a significant barrier if you look back, a long ways back. Every time we get in here, These are very, very formidable lines here. These were representations of the value of the security when they announced quantitative easing and the end of the day's trading. Up here represents the value of the security the day they started quantitative easing. So this right here to me is our ceiling. We would not see a whole lot improvement beyond this. Stock or bonds going beyond that. I don't see any market movers, any funds, anybody deciding they want to put more money into the mortgage-backed securities beyond what these levels of value are, because there's not enough value in it to do that. Now, barring, of course, the Federal Reserve creating money out of thin air, throwing it in there, of course, that's going to be very, very inflationary. It's going to destroy our dollar. There's all that. So that's where we're at today. Appreciate you guys. Happy birthday, Stu. And we'll see how things roll out on Tuesday.